The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour on April 8th of this wonderful year 2014. Anyway, we've got an interesting market as usual. There's been no uninteresting times. Of course, that is the Chinese curse. That is, you live in interesting times. Trading out at 1852.41 on the S&P cash. Oop, that's actually, I'm glad I had that up. I better update this just to make sure where we're at. 1850 and 58 cents. Yesterday we closed below 1848 on the S&P cash. I took that as a valid sell signal. And so it was 3 points lower than that. None of these numbers are absolutely exact, but it was close enough. I like the way that the market closed at the end of the day, that it did sell off 3 or 4 points as we went into the close. Another good indication. Today, one more day, a close below 1848 would again give us a pretty good indication that the upside is going to be muted and the downside probably a little bit more vibrant. I think we're going to probably see 1827, 1825 on the S&P cash before we see higher in this marketplace. Confirmation of that would be yet another close below 1848. Hang on just one second. So as we look at today and start off today, we want to see just how the volume is. And of course, with a lot of volume, we expect that we would come back and have a fairly big bounce. Being up 6 points on the S&P cash, probably not a lot so far. 2.36 billion shares on the consolidated New York Stock Exchange tape also is not going to be that great. So we've got a lot of issues, and none of those are being solved to the downside today. And again, the last 10, 15 minutes probably going to tell us a lot about what people are thinking, but not seeing a lot of fund managers race in by just yet. But are seeing many people on Wall Street crowd to the CNBC and Bloomberg windows to tell everybody, buy, 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 buy. They never, I don't think they even know anything else. And it kind of reminds me a great deal of the 2000, 2007, 2008 period. We've got a couple of market cycles that I've gone through now and pretty much understand how to read disinformation in the market. And right now, I kind of vaguely remember, not vaguely, but probably really remember well, Joe Battipaglia. Anybody that's been around the last few years probably doesn't know him because he's expired. He died a couple of years ago. I'm sure he loved his kids and a nice enough guy. From the highs of the market and the NASDAQ market in 2000 to the absolute lows in 2003 and 2004, he continued to say buy, buy, buy all the way down. When it got to about, 787, and the time was to buy in 2004, he was telling everybody to sell. And I think his job was just to come on and tell everybody repeatedly the opposite direction of the marketplace. You could have hardly gone wrong betting against him for about 10 straight years. But we're starting to see the new gang of those folks. I have a feeling that no one wants to be the butt of the jokes that he was over those years. And so they are tending to be much more coming on, saying bye, 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 and then quietly going back and putting out a sell order the next day so that they can play both sides of the fence, i.e., I'm very bullish, I'm very bullish. Well, 5 minutes after I got off TV, I just said sell. Now, you can do that, but you have to have, I would think, have to have some movement in the market to actually change that 5 minutes after you got off the TV. And the answer is they want a LexisNexis or something else out there to have a deal where he said, well, I said sell, and it just wasn't on TV, so there. But, we can change our opinions fairly quickly, but these guys haven't changed their opinions in 3 years. My guess is that it's more about playing both sides of the fence than actually getting anything truly done. But I digress. Again, probably going to win the Emmys for podcasting on digressing once again this year. When we look into history on this day in 1932, the market crashed down almost 6.4% at the intraday low, finished 5% down for the day in 1932. And what happened? A lot of rumors, but I think after the days after the crash, a lot more coming around. But Britain had already led in abandoning the gold standard. And there was a thought that the exact same thing was going to happen here in the U.S. And, of course, they just inflate the dollar without any way to show gold going higher. The inflation and inflating and bastardizing the dollar was what they wanted to do. Of course, that eventually came to pass. But it cost 5% at the close on this day in 1932 and led to Senate investigations asking all manner of people to come up in front of them, sworn to tell the truth. And it was fairly ugly, but there was a lot of manipulation, and short sellers were pretty much the target of a lot of these and a lot of that movement in there. And, of course, if you go back and look at a chart of the crash, you'll find out that it didn't just crash once. You had a lot of movements back up only to get resold again. And it took a long time for the stock market to actually bottom out there. Pretty good lesson in what's going on. I digress. Okay. Well, anyway, that's pretty much it for today for the news. There really isn't a great deal of news in this market. Everybody's waiting for earnings. Of course, after the bell tonight, it will be Alcoa. We'll have a little bit more coverage of these stocks that are going to be reporting here in the near future. I'm working out something right now, writing a little program to help me out and get stocks that are going to be reporting. So I got a little bit better idea of when they're coming out, but still going to be a interesting, probably about 3 weeks with a lot of earnings coming out. When we look at Alcoa so far, this thing finally broke through $10, and you had some decent energy, but it couldn't hold the highs. It's pulled back. It's made a doji today, and I thought I had it up here before. Let me see real quick. Maybe I'll have to catch it during the break if I can't find it. But is that it? I tell you what, it is short on the news. Okay. Anyway, I'll go back and look at it. I thought I had the numbers for the expected move in Alcoa after the bell. I don't think it's much. I think it's 50 or 75 cents. But, could tell us a lot about what's going on here. And, of course, Alcoa, a lot of the movement out of this $10 range over the last few months has been the use of steel and high production volume trucks from Ford. And, of course, some of the other new cars where they're really trying to get better fuel mileage by using aluminum. And it's kind of come out. Not a bad-looking chart, actually, and this last leg with more energy suggests that you could have a little bit more of a test of the top before this thing is finished, and or maybe volume come in. Maybe there is enough aluminum to be used in Ford F-150s and other new cars besides Audis. And what can you say? Anyway, you can give me a call at 877-927-6648, 877-927-6648. You can email me at path@tfnn.com, and you can put a message in the den if you'd like me to say something about it. If you do email me, make sure you tell me your city that you're calling from and at least a first name, so I know who to refer to. Greg in SoCal emailed me yesterday, but it was rather late, and he wanted to ask where I would set stops in a couple of stocks. FAZ. Take a quick look at that. It doesn't say whether he's long or short, but I assume that he bought this one off the bottom. Frankly, I'd set your stops extremely wide. I think that this is going to be a longer trend. I could be wrong, but I have a feeling that it will be. And, you had a little lighter volume up here today. Probably going to mess around, but I don't think you'd want to. I think you'd probably want to put it pretty wide. So I'd probably put it down at, I don't know, probably what, $19.35, something like that, $19.35. I'd like, even though you got a little bit of profit here, I think what I would been shooting for, even if I took this trade, would have been the 25.35 from the February 3rd. So I'd give this thing a lot of room. There's not much of a trade at the moment, and I wouldn't have got into this thing for $1, $1.50. But looks interesting. And he also has the socks. So we'll take a look at that. What do you see? I don't see your buy points, so I don't know. The direction semiconductor bear 3X, which is SOXS. He had a huge volume day, of course, on the 4th of April here, and getting a little bit of retrace. I don't know where you bought it again, but I'd probably give this one a lot of range. So I'd have a stop probably somewhere about $25.15. I just wouldn't want this thing closing back below 25.02. But again, huge range. Once these things break above 29.20 in the SOXS, you're going to have a nice little move out here. Anyway, we will be back in just a minute. You can give me a call at 877-927-6648, and I appreciate your call. We'll look at more stocks today in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we, as usual, get into charts just a little bit earlier today. He had a question in the den. It says Polar, that's me, path of least resistance. Have EPS estimates for Google, Amazon, IBM, or Microsoft been reduced since March 25th when the price cuts for web services were announced again? And my answer is not really. Most of these web services sound like a lot of thunder, but these bigger companies, IBM, Google, Microsoft, a very small percentage of their profits. More interestingly or more thoughtfully, these huge cuts in services, namely web services, like Amazon Web Service, which I've been trying to work with the office for a while and move some of the stuff at TFNN over to, have been cut yet another 30%. There have been 42 price cuts in 2.5 years from Amazon. It's like if you wake up every day and you just don't expect yet another price cut. They've become Walmart and been able to cut and cut and cut, mostly because no one is expecting any profit from them. In the meantime, they're killing off people like Rackspace and CRM, having a tough time on that. Is it RAXX? I think that's Rackspace. Let's see if we... I can look it up. Rack. What is it? Oh, it's RACK. Take a quick look at that. RACK and see how they are doing. That's not it. Rack Wise. Oh, RAX. Okay. There we go. And you can see pretty much the damage that's already happened. We'll go back a little bit farther out here. This wasn't down too long ago, trading at $54, But there's just no way these guys can hold up a viable business as long as they have to compete against somebody in which the market says they don't have to make any money, a la Amazon. And, of course, even Amazon has started to feel pressure in this market, got down to 3.13.13. This one was actually a nice ABC move up here. And I thought maybe it would be tough for them to break through that 337.73, but I think maybe we're starting to find some of these come out. Now, if you could get a move back up to 350, 360 on Amazon, maybe the third ABC down in this thing, or third leg in that ABC down, and would be interesting. See if we have anything else. Wanted to look at something here, if I can actually find it. Oh, there it is. Now, some of the things that have come out today, there is a little bit of news. I just got it a little bit late. We have been talking about the Alibaba IPO for a while. They were looking to try to push this thing out in this first quarter, maybe the second quarter of the year. Now they're looking far into the third quarter, so Alibaba probably not going to be coming public until September, maybe October of this year. My guess is that they missed, or at least they think they missed the window up here at the top with the most appetite. They're going to wait for the market to settle over the summer and try to come back and push the IPO out next fall. But looks like it has been delayed. And, of course, I think that's a little reason, besides the market pop out here today, that we're seeing people come back into Baidu. Baidu's a very light volume move back up in here in the market. But this thing sold off fairly good. And, of course, China having problems. It may take a while for everybody to get back. I have heard a lot of discussions in the last day or two that they're pushing the $150 or $150 billion valuation of Alibaba to $200 million, or $200 billion, excuse me. I'm having my Dr. Evil moment. But it looks like we're probably not going to find anything more out here. And, of course, heavy volumes in these last two lows on Baidu itself. March 22nd, 8.2 million, and April 7th, 10 million shares. And we could see much lower prices in these China internet stocks in the near future. The charts look fairly horrible. Probably going to get a bounce out of here. Maybe this is all you're going to get on Baidu, but it looks to me like everybody is continuing to exit stage left, and we'll see how that plays out. Anyway, give me a call, 877-927-6648. Look forward to your phone calls. And I'll be going through more and more stocks here. Interest to our many listeners.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, that's right, 1849.81 on the S&P cash, which is the last click out here. Again, what you don't, if you're bullish, what you don't want to see is a close below 1848. And of course, if you're bearish, you do. But this would be one more attempt up at the highs. I think really moving back down to 1827, 1825, and maybe that's where we're probably going to have the first bounce. Probably going to see something, or at least I'm speculating that we're going to see some bounce. 1825, maybe back up to this 1850, and that's probably going to be all that you wrote. Then we're probably going to start and keep moving back down to that 1800 level, probably break it. Probably going to see the Dow hit below 16,000 here in the next, I imagine probably the next week or so. And that's going to probably put a little punctuation note on what's going on in the market. Got a lot of stocks that it looked like they started to make lows out here. One of the worst of this bunch is the for-profit education companies. And even some of these dogs out here are finding a light volume, testing the previous lows. EDU is one of these. March 12th had $26.01 for the low, 2.8 million shares. Got into it yesterday with 1 million shares. And, you know, these things are fairly well off the highs. They're going to take some consolidation to break these lows. But what you don't see is any real volume coming into these stocks, and that's what you have to watch. Did post a note in the DIN during the break. The CME Group says a number of Globex futures and option markets, including corn, wheat, feeder cattle, live cattle, lean hog futures, several classes of milk, the National Soybean Index, and a number of others were halted due to technical issues, according to a market update posted to its site. So now the CME is getting in on the NASDAQ's job of stopping the market move. And John in the den says, I smell rats and fish and probably something steaming that doesn't smell good either. But it is going to be interesting. Of course, like we said in the second segment, first segment, looking for Alcoa tonight after the bell. Not a lot of earnings until this Friday, other than that, at least stocks that could move the market. Some of those stocks are going to be the financials. So if you are trading the XLF, you should get ready for that. Let's take a quick look. And what do we have here? Well, this thing gave a pretty decent sell signal in that it should have, with all this volume that you had on the 20th, should have easily been able to hold these highs. And, of course, you had some very nice volume. 91 million shares on the 20th of March, but the volume really didn't pick up that much over the last 3 days. Of course, a little lighter volume, but again, I think we're probably going to see maybe a little higher in some of these financials going into Friday. But the stocks that you want to be watching are for Friday earnings is J.P. Morgan, and that comes out before the bell at 7 a.m. Another one of these stocks that didn't really have that light of volume at its high, so I wasn't particularly shorting J.P. Morgan. Basically tied the previous January 16th high at 59.62 that had 35 million. As you came up to the volume, 3.7 million on the 20th of March and 35 million, so you matched it, but kind of closed lower than that. The next day was 25 million. Next day was 24 million. Turned back south with 22 million, a little doji, and of course, like I said, the last few days, not all that exciting a volume, but at the highs, you won't see volume coming in all the time, hugely and quickly. But it is what it is. But J.P. Morgan is one of these you're going to be wanting to watch on Friday and know that they'll probably be able to move a few of these up into that. The other financial out here on Friday is going to be Wells Fargo. This one looks a little bit better. The energy and the legs, not all that bad. So I probably would pick other sectors to be short. I think there's a lot weaker ones coming out in earnings, but certainly not the financials. But be looking at that. And again, remember, these are Fridays. On Wells Fargo, earnings is at 8 a.m. on Friday, and of course 7 a.m. on J.P. Morgan. So there'll be enough movement. Then we go into actually next week. And so next Monday, we want to be watching some in that financial sector. United Bank Corp on Monday. Let's see, what else do we have here? Bank of the Ozarks. A lot of regional banks. Citigroup, that's before the market open on Monday. So let's take a quick look and see how that financial is looking. This thing looks like it's just probably not going to fall too much farther, I would imagine, before Monday. May go out here and tag this $45 if the market rolls over. But you've got 50 million shares from June 24th of last year at $45.06. Really looks like, what'd you have, 30 million? Got 20 million shares today. Could just kind of come around to that $45 level on lighter volume. But again, be very wary of the stock. There's people going to jail. That's all you need to know. Someone's going to jail. Other things, let's take a look and see if there's anything else on Monday next week that we want to look at. JB Hunt Transportation, JBHT. Let me give us a little read of what's going on. This thing looks to me more like an ABC down than anything else. What did you have for volume here? Yeah, you had some nice up days the last few days, but this thing looks like it wants to come back and test lows out here. But going into earnings, they can hang a lot of these out. Let's see what else we have. Anything else? RMBS for next Monday. Rambus Systems. This one had been doing fairly well. Wanted more volume, though. I noticed that this one we talked about, I think, a few days ago, had broke out, but you really wanted to see more than 2 million shares, and you got about basically actually 2 million shares. So probably don't want to be short, probably don't want to be long, but interesting to see if we have anything else on Monday when we come back. Washington, Western Windmark. Okay. And on Tuesday of next week when we come back, what do we have? CSX on Tuesday. So let's take a quick look at these train companies. Again, you can give me a call at 877-927-6648, or you can email me at path@tfnn.com. Okay. Anyway, CSX, another one of these. This has given a vital sell signal, and that was the test of the January 15th high, $29.24, 12 million shares. Got into it on the 25th of March with the 9 million shares, so 25% short on the volume. This thing tried one more time trying to get back in, rolled over with the general market. It hasn't been a lot of volume in it since. And I suspect that, like I said, a few of these probably going to run into earnings before we start seeing any big movements. And of course, this is Tuesday of next week. Intel, INTC, probably benefiting a bit today from all the news about Microsoft's basically retirement of Windows XP. And volume's probably going to be a little bit better than I thought it was going to be earlier in the day. But still 36 million shares on Intel right now, going after 58 million shares. So maybe this gets 45 million shares, but still needs a little bit more from the January 15th high. But these stocks with a week left before earnings, probably not going to be great moves out here. Of course, next Tuesday also Johnson & Johnson. Let's take a quick look at that. This was another one of these things that's broken out to highs, but no sign of strength coming out of them. You had a nice day as it did kind of break that $95 level with 24 million shares, but since then volume has just kind of been tepid. I could see this coming back to 95 next week for earnings and earnings announcements. Coca-Cola also a week from Tuesday. A week from today? Okay. Coca-Cola Company. These things coming down a couple times in hard volume. Untested high volume low on Coca-Cola. That's the February 20th low at 36.89, 26 million shares. So good chance that we're probably going to come back in and test these lows before we get any higher on this one. Volume wasn't all that bad compared to the previous high. On March 28th, you had 24 million shares at 39.03. So you did go over a penny higher than the February 24th high at 39.02 with 22 million shares. So a little bit of stuff here for the bulls and the bears. See if anything else. Yahoo also on next Tuesday. YOOO. Of course, right now this thing's I started to sell off with the general market, but some very high volume yesterday, and I have a feeling that's when everybody started finding out that Alibaba was not coming out the door probably until the third quarter now, and probably some people getting out, and probably we'll see another ramp in Yahoo when they come back in. But when you look at the valuations of Alibaba, Yahoo is basically about $2 billion of the valuation, and that's about 5% of the value of the stock now. So everybody's pretty much owning Yahoo to get to Alibaba, And I have a feeling we could see continued weakness and a ramp back up next fall if that Alibaba IPO does come out. So let's go to Wednesday of next week real quick. Okay. Abbott Laboratories, Adtrans, B&G, Foods, Bank of America. Okay, next Wednesday, or a week from tomorrow, Bank of America. Let's take a quick look at that, see how that's looking. Now, not a big clue here either, other than the fact you had a reversal day on the 21st. It was plain. You had a lighter volume than the previous high, which was January 15th, that had 330 million shares, $17.42. Went to 1803, closed above it, but you had about half the volume of the previous high. Reversed the next day and it's been going down since. And I don't know what else you can say about that. But again, not going to see a lot of movement, I think, in the next week in these. Going to be a lot of other stocks moving. Capital One, another one on next Wednesday. This one got into its previous high. Didn't prove the point, i.e. go above the previous high on lighter volume and close below it. So maybe a little better looking of some of these. But Capital One COF, that January 7th high, 5 million shares at 78.49, got into 77.91 on April 4th, just a couple of days ago, and seeing a lot more of that light volume as you just touch that candle. Don't touch me. Don't touch me. Anyway, it is what it is, just lighter volume. And you don't always have to touch the absolute high. If you get into the candle at a high, the volume shrinks like that, doesn't really have to get retested. I always like the high volume lows, though, to get retested and prove the point. Go below them, close back above them before you get back in. Okay. Okay, Google. Also next Wednesday. I don't know if you can put a lot into that. It's been down the last few. KSU. I think these train stocks are probably going to tell us a lot more about what's going on in the market. Of course, this thing blew apart back on the 24th of January. Came back up first time with 2.4 million shares at $106 on February 3rd. You got back to 105.73 on April 2nd with 1.6 million shares. That's all going against that huge volume day down at 14.6 million shares. So probably have a trading range setting back up in here between $95 and 105. You might have enough time on this to see it pull down a little bit, get a little running room before this thing goes to release earnings, but be a tough play. I think there's some easier plays out here. I'm looking for stocks that have their next earnings dates pretty much in in May. Anyway, we'll be back in just a minute. Give me a call, 877-927-6648. Email me at path@tfnn.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Anyway, as we come back, a lot of interesting discussions in the den today. But like we said, it's all going to be about the close in the last 15 minutes, and another close below 1848 on the S&P cash, probably going to be a fairly decent signal. I think we've had at least the minor correction before earnings. We're probably going to see a little bit of volatility, like I said, but I have a feeling we're probably going to go down to 1825, something like that, back up to 1850. We're going to probably churn in this range for a little while. I think we're front-ended in this earnings cycles, just a little bit more on the side where some of these financials could do at least okay during this one. My guess is that they'll do okay, but guide down in the future, as many of these stocks have. So it'll be interesting time for earnings. Had a email from Ken. Didn't tell me where he was from. But I will digress with that later. Looking for a price target on oil and gold. I'd certainly like to see 1175 on gold, but everybody knows that already. I'm waiting to find some kind of washout low before I buy it. If we're lucky, we get it. If not, then I'll find something else. On oil, I'm looking for $82 on West Texas. And I'm not exactly sure what's going to break it, but it certainly does, to me, look fairly weak. We're seeing some movements out here in the markets, but it's going to be kind of tough for me to say anything else. But I'm not positive on the energy sector. In fact, I think we're probably getting fairly close to the time where you can short away on natural gas, but maybe just a few more days away. Anyway, wanted to bring up Apple. Apple has not looked good over the last few days. Some news out from Samsung last night in Korea, and of course today for us, about how the high end of the market, what they call the superphone part of the business, pretty much everybody's got a phone out there that ever would want one. Walt Mossberg was out talking about the new Galaxy 5 waterproof phone, and of course they're throwing it in water and everything. Of course, Walt Mossberg has been, well, you can't say that he's unbiased. This is a guy that Steve Jobs developed as a source, flew around in his private jet plane, from what I hear, showed new products years before they came out, non-disclosure. Really, you know, you can make the press a friend of yours if you know the right thing to do. If you look at the president today, if you write something negative about him, you're not going to get back in and get another story. So access can be sold, whether it's politically or for business, and probably wise for them to do that. But I don't spend a lot of time looking at Walt Mossberg's opinion of anything other than Apple, because he will pretty much dyed-in-the-wool Apple guy. But it looks to me, especially with some of the documents coming out of these lawsuits over the last few days, showing Apple is very concerned about the business they're losing and long-term customers to larger screens, especially women. And I don't know when is Apple's earnings next. Hang on a second. That would be interesting. Okay, April 23rd. So keep an eye on it. We're well within shooting range of that. Anyway, looking for earnings after the bell with Alcoa. We'll see what that does for the market. Not a whole lot until Friday with a few of those financials. Remember to sell when you can, not when you have to. Same bat panel, same bat time tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.